What's good, everybody? Welcome to Money Moves. It's a brand new episode, and we're going to talk about some of the latest and biggest news that's come out today. So it's April 19th, and I came across this article right here on CBS News that Netflix stocks plunged 25% after streaming services loses 200,000 customers. So why are they losing 200,000 customers? So let's dig deep into the article on what's causing this issue. So Netflix suffered its first subscriber loss in more than a decade, causing its shares to plunge 25%, extending trading amid concerns that the pioneering streaming services may have already seen its best days. So let me know in the comments below if Netflix already peaked and its best days are behind it, or if you believe in Netflix that it can still maintain as the pioneer streaming service. So let me know in the comments below. Like, subscribe. This is Money Moves, where we talk about the biggest news when it comes to all things money, crypto, stocks, real estate, whatever it may be. We're going to talk about it on this. So let's continue reading the article on what caused Netflix to lose 200,000 customers and the stocks to plunge 25%. So the company's customer base fell by 200,000 subscribers during the January-March period, according to its quarterly earnings report released Tuesday. It's the first time that Netflix subscribers have fallen since the streaming service had become available throughout most of the world outside of China 6 years ago. The drop this year stemmed in part of Netflix's decision to withdraw from Russia to protest the war against Ukraine, resulting in 700,000 subscribers. So they're already losing a ton of money from having them protest by not having Netflix available in Russia, and that's a lot. 700,000 subscribers just lost like that because of the war. So let's continue on to see what else it says. So even so, Netflix acknowledged its problem are deep-rooted by projecting a loss of another 2 million subscribers during the April-June period. So they're projecting that they're going to lose another 2 million during this April-June period. 2 million subscribers. And man, just imagine that, how much Netflix is per month times 2 million, and that's how much they're going to be losing. That's a lot of money, and that's going to affect their pockets and their shareholders' pockets. So if the stock drop extends into Wednesday regular trading session, Netflix shares will have lost more than half of their value so far this year, wiping out about 150 billion in shareholder wealth in less than 4 months. So in less than 4 months, they're about to lose 150 billion dollars. Man, that's a whole lot of cash. And I can remember that Apple and Netflix stock and Amazon, and these were the pioneer stocks that you want to have invested in. And now Netflix is losing money. And so, is it a sign of the economy? Is it a sign of Netflix service just going downhill? What is it? So let's continue reading along to see what else is really causing this subscriber loss and their stocks to plunge. So Netflix also lost 800,000 subscribers in 2011 after it unveiled plans to begin charging separately for its nonsense streaming service, which had been bundled for free with its traditional DVD by mail service. Who remembers that traditional DVD by mail service? I remember getting DVDs in the mail, and now DVDs is obsolete. So let me know in the comments below if you were one of the early subscribers of Netflix when they were offering their service through DVDs. And so I was one of them, and I remember that, so the good old days. And the customer backlash to that move elicited an apology from Netflix CEO Reed Hastings for botching the execution of the spinoff. All right. But the latest subscriber loss was far worse than a forecast by Netflix management for a conservative gain of 2.5 million subscribers. The news deepens troubles that have been mounting for the streaming since a surge of signups from a captive audience during the pandemic began to slow. So everybody remembers the surge. So when the pandemic hit, we were all stuck at home, and what was there? The only thing we could do was just watch shows and TVs because businesses were closed. You couldn't do much, and Netflix and all other streaming services skyrocket. So now, is it a tale of things are going back to normal and now less people are at home, they want to do stuff, so they're canceling the subscriptions? Who knows? So let's read along. So it marks the fourth time in the last 5 quarters that Netflix subscribers growth has fallen below the gains of the previous year. Now investors fear that its streaming service may be mired in a malice as it faces stiffening competition from well-funded rivals such as Apple and Walt Disney. So the competition is getting out there. All these companies that were producing movies and shows now are having their own streaming services. And according to the article, they believe Apple and Disney are the biggest competitors. I'm not sure about Apple if it's there yet. Let me know in the comments below if you believe Apple is already reaching that top tier streaming services. For sure, Disney is coming out with fantastic shows when it comes to Marvel and the Star Wars and all the other shows that when it goes to kids. So let's continue reading along. So Netflix is still the single most dominant player in the streaming industry. So they're still number one, especially in demand for original content. But as several nearly century-old firms erode the incumbent's market share, Netflix is reaching a point where it needs to focus more on subscriber retention, especially in North America, while its legacy media-backed competitors Disney and HBO Max continue focusing on subscriber growth in key international territories. So I believe HBO Max is a real problem for Netflix. And HBO Max has been having some fantastic shows. They have that agreement with DC where they have a lot of exclusive DC content. And then you have great shows. They have Game of Thrones. They also have Succession, which is another great show. I can't think of others off the top of my head. They also have great movies. So they're a big competitor that's going to want to take a good portion of the market share. Last year, Netflix had its weakest annual gain since 2016, adding 18.2 million subscribers. That contrasted with an increase of 36 million subscribers in 2020, when people were corralled at home and starved for entertainment, which Netflix was able to quickly and easily provide with this stockpile original programs. And that's a fact. When people had nothing to do and we couldn't go anywhere, people would just been watching original content or just whatever it may be that was provided by Netflix. All right, password crackdown. So I believe this is another big issue that's really going to hurt Netflix. So Netflix has previously predicted that it will regain momentum. Among other things, Netflix signaled that it will likely crack down on sharing of subscriber passwords that has enabled multiple households to access its service from a single account. So they're cracking down on people sharing, and that's going to impact them, because what are they going to do? Are they what are these people going to do once they get caught sharing passwords? So the Los Gatos, California company estimated that about 100 million households worldwide are feeding off the same account. 100 million households, including 30 million in the US and Canada, its largest market. To stop the practice and prod more people to pay for their own subscription for their own accounts, Netflix indicated it may expand a test introduced last month in Chile, Peru, and Costa Rica that allows subscribers to add 2 people living outside their households to their accounts for an additional fee of $2.99. So to be able to add 2 people outside for $2.99, that's not that bad. I know a lot of people are right now things are getting pretty tight, and people may want to cancel their subscription, but I think $2.99 is not that bad to add subscribers that are outside of the household. Account sharing as a percentage of our paying membership hasn't changed much over the years, but coupled with the first factor means it's harder to grow membership in many markets, an issue that was obscured by our COVID growth. Netflix Tuesday, in a letter to its shareholders, Netflix ended March with 221.6 million worldwide subscribers. So they still have a ton of subscribers, 221.6 million worldwide subscribers. So they are still sitting comfortable when it comes to the subscriber memberships. But is it little by little because the new competitors are adding good, better, or good, or as equal content? Will it slowly start eroding that subscriber count? Who knows? Let me know in the comments below. Subscribe, like, and let's continue to read this article. So with the pandemic easing, people have been finding other things to do other than streaming services, are working hard to lure new viewers with their own award-winning programming. Escalating inflation over the past year has squeezed household budgets, and that's real. Inflation's at 8.5%. So let me know what you guys think about that, because you know what, a lot of households are really starting to feel this inflation. And so what do people do when they're tight on money? They start eliminating things that are of a luxury and entertainment, such as Netflix. And any type of entertainment like that, that's one of the first things they cut. And despite the pressure, Netflix recently raised its prices in the US, where it has its greatest household penetration, where it's had the most trouble finding more subscribers. In more recent quarter, Netflix lost 640,000 subscribers in the US and Canada, prompted management to point out that most of its future growth will come from international markets. So it seems like they're already kind of waving the white flag when it comes to North America, United States, and Canada, that they're not going to get that much new growth, because there's so much entertainment right now. It's like a buffet. You could pick and choose what you want. You have Netflix, Apple, you have Disney, HBO Max, you have Stars, you have Hulu, Peacock. You have all these streaming services where now people Netflix is no longer like the main source when it comes to entertainment. So let me know in the comments below. Are you a Netflix subscriber? Are you do you currently own stock? Are you dumping your stock? Let me know in the comments below. And Netflix is also trying to give people another reason to subscribe by adding video games at no extra charge, a feature that began to roll out last year. So this is some big news. If you own stock in Netflix, it dropped 25%, and it's losing subscribers. And I think it's going to be a sign of more to come, because unless they just have some sort of dominant series such as like Game of Thrones, or like Peacock has The Office, or anything like that, where it can literally pull more subscribers, I just don't see it really happening, because there's so much variety now and so much selection when it comes to streaming services, that I just don't see Netflix having that growth anymore. Will it maintain? Possibly, but let me know in the comments below. This is Money Moves. Like, subscribe, comment, and thank you for joining me on another episode. Thank you and peace.